Hello, guys. Welcome to another episode of the Comms Lab by Comsi, the place where everything related to Amazon FBA and e-commerce. My name is Vincenzo Toscano, founder and CEO of Comsi, and today we're going to bring you a very interesting topic, which is basically how you can use your current assets to help your e-commerce business grow by finding the best funding solution. And that's why we actually bring you today Nikolaus, who is the CEO and founder of Myos, which is actually an asset-based finance solution for e-commerce businesses. So, Nikolaus, it's a pleasure to have you here today. How you doing, my friend?
Likewise, thanks, Vincenzo. Thanks a lot for having me here. Great to be.
Thank you for being here. Actually, been interacting and working with my team for a while now, and actually, I love what you guys do in the space. I mean, we know that when it comes to funding, there are many solutions, but at the same time, most of them are actually not on the interest of the the e-commerce seller. And I love the fact that you here, Myers, are basically shifting the way you support them and the solution you provide to them. So it's going to be very interesting, to give some eye opening to the sellers that see this podcast to see that actually there are solutions that can be very reliable to help them scale their business. Now, before we jump into that and all the technical information related to that, I would actually like to start with you, Nicolás. I would like to understand how you actually jump into this space and what basically gave you the idea of starting Myos. If you can give us some background there, yeah.
Yeah, sure. Happy to do so. So I've been in the startup digital industry for a while now. I joined Groupon roughly 12 years ago, if I remember correctly, and
Okay.
so that was my start in this industry, and then uh, like started my first own venture in 2012, which kind of like was a spin-off from Groupon, also had to do with couponing, but more in the food industry. Did
Yeah.
that for better part of 6 years. And then in
Okay.
2017, we started working on the concept for Myos. And um, like the way this concept or this idea was created is quite interesting because it was um, more or less randomly. A good friend of mine was at that time a successful Amazon seller. So he
Okay.
was building up a small team, selling on Amazon. Already had a good seven-figure revenues, and
Nice.
a couple different brands. Most of the products sourced from China, and
Yeah.
he really struggled financing the working capital to realize
Yeah.
the growth that he wanted to realize in the business. And in the end, he got a loan from a bank, which had been his house bank in Germany for quite a while, and that came with 6 months of back and forth business plans and negotiation. Came with
I know.
personal guarantees, of course. Yeah. So
Wow.
if you
Yeah. Yeah.
take a loan from a bank, you have to take some personal risk,
I know.
and it also was a pretty classical loan, so with monthly repayments. And as I said, he was sourcing most of his products from China. So if you're
Yeah.
waiting 2-3 months for your goods to arrive from China, and then maybe another month until they're ready for fulfillment, and you already paid 4 monthly installments of your finance, then it defeats the purpose, because the whole
Yeah.
reason you got financing was to bridge the gap between when you pay for your purchases and when you turn them to revenues, right? And
That's right.
so these factors in combination um, basically led us to sit down and brainstorm a bit of how you could structure a financing model that really fits nicely, like snugs into the working capital cycle, or the order or cash conversion cycle that you have as an online seller. Yeah.
Yeah, I actually think that's great because I also agree with you. I mean, one of the tricky things when it comes to keep scaling your business is that a lot of these solutions are based on, as you said, personal guarantees, and some and that can be very challenging for some of them to put their house in the line, or their assets, you know. And I like the fact that you guys in fact take a different approach, which is actually analyzing what is the future potential of this product, and take the risk with them to actually support them throughout the journey, which is a complete different approach as most institutions do out there. So maybe if you and we so we can start giving some context about how Myos can work for sellers. Can you give us a little bit of what is the journey from maybe start to finish in terms of approaching Myos? What are some of the things people should consider, and go from there? Yeah.
Mhm. Yeah, maybe just in a nutshell, what does asset-based finance mean? So what approach did we in the end set up? It's the basic principle that as as an underlying, you could say the underlying value of your loan is determined not by your finances and your P&L, but is determined by the products you sell and the market position of these products. So this is the core principle, and everything else is kind of like like derives from that principle. Yeah, that means what we do in the end is we look at the products that you sell, and we look at their market position on their respective marketplaces, or maybe you find them on a price comparison site like Google Shopping, etc. And we do a lot of search engine analysis. So how well are your products ranked? What's their price point? What's their quality in terms of the 5 stars? All these things. And this gives us an indication of whether we want to finance these products and how much money we want to lend against them and at what price. Yeah. And this is the model. And you can already see this is like fundamentally different from a traditional lending model, where you look at the at the P&L, where you look at the cash flows and all that, and determine your risk based on that, which we don't. Yeah, it's quite funny. We are a financer, but we don't know the profit or the revenues our customers make.
I see. Yeah. Wow.
And what does it mean for the customer? It's a very flexible product, and the journey usually starts by going to our website, signing up. It takes a couple of seconds essentially to sign up. It's like the usual. You give your company name and you pick a password. And then once you sign up, you start a loan application, and this takes you roughly 5 minutes, sometimes less, sometimes more. The loan application comes basically in 3 parts. The first part is you tell us like what is your order situation, what's your supply chain situation, and when and how do you need the money? Yeah, because that's for us. There's always the basic principle is always we have the goods that serve as collateral, as a security, to avoid what you mentioned, private guarantees and things like that. So in the beginning, we need to figure out how do you get these goods? Do you already have them in your warehouse? Are you just planning to order them? Are they already on the ship? So what's the situation with the goods? And then who's going to get the money in the end? Like if you have the goods in the warehouse and they're already paid, classic inventory, then of course you're going to get the money, and that's the easiest form basically. And
you can use it as you want for advertising or whatever you desire. Yeah.
Exactly, advertising, new products, whatever you want. And another situation on the other extreme is maybe you're planning a new order, and so in this case we would potentially directly pay your supplier to make sure that the money is really used for this order, and then the goods are shipped a bit later. That's also possible, and then there are a couple of combinations in between. Yeah, so this is the first step. It's kind of like a tree of small questions that are for you really easy to answer, because you typically know where you are, what you want to order.
You should know. You should know. Yeah. Awesome.
The second part is the kind of like for us, for our evaluation, the most important part. That's where you tell us what you sell. So what are your products? And it's essentially just a list of product identifiers. It can be the GTINs, the EINs, or the Amazon identifiers. And then if you already know it, the quantities that you want to finance. Yeah. And then we can go ahead with that list and do our estimation. Yeah. And the third part is simply you can already start uploading documents or making comments if you have some special requests or something. And like the usual disclaimers and check marks, and that's it. So that's the whole loan application.
Yeah, straightforward.
And you see, there's no part where you have to plug in your bank account or where you have to upload your management accounts on P&L. Yeah. That's the
Okay.
unusual part.
Yeah, actually, I wanted to ask you that because I mean, when it comes to applying to all of these, most of them they want to see all your bank statement, your Amazon account inside out, or your marketplace.
Yeah.
So for this, you wouldn't need this at the beginning, right?
What you can optionally do at the beginning is give us access to your Amazon or Shopify account
Okay,
for us to validate your sales. Yeah. So
awesome.
this is just to validate that you really like already selling these products
Yeah,
and how many you sold in the last
for
couple of
sure.
months. Yeah.
Good.
But you can also do this at a later step. So we can give you a financing offer, and completely unbinding, of course, a financing offer um, even before you give us your Amazon or Shopify account. Yeah. So
Okay,
that's no
very nice.
problem. Yeah.
Okay. Now, when it comes to applying, the reality is, I guess, of course, you also need to have some presence already when it comes to selling online. And for sure,
Mhm.
there needs to be some minimum criteria in terms of when it would make sense for somebody to start using you guys. Okay. So maybe just for everybody watching this, what would you say is the minimum criteria that you need to have to even be considered to make sure the application is worth of your time and you actually can get accepted for the program?
Yeah,
Yeah.
we try to support sellers from very early on.
Okay.
That's also kind of like our specialty, because you can look at, like, you can be a very small and very young seller, but selling very good products, right? So your
Mm,
P&L is not quite there yet, but your products are fine, and
a
that's
lot
fine
of
for us. So we
potential.
say exactly. So we say, as a seller, you should have around about 6 months, or at least 6 months of e-commerce experience. Yeah, it doesn't
Okay.
necessarily to be with this current company. It can be that you had a previous e-commerce company and can show some experience there. It's also possible. And the products themselves, they need to be selling for at least 50 days for our algorithms to work. So we need
Okay.
some history for the products that we're going to finance, to run our evaluation, and these are the main criteria. The product itself ideally shouldn't be super cheap products, so like below £5
Yeah,
or
for sure.
in that range, because there's a, with these very cheap products, there's always a very high risk of a category being disrupted by new
Yeah.
entrants or different
Yeah.
products. Yeah. And then the financing usually starts at around £10,000, and
Hmm.
goes up to currently 2.5 million. So it's a pretty broad range
Okay.
that we can
Very nice.
cover. It's just for regulatory reasons, we can't go below 25K if you're not a limited liability company, like a limited. Yeah.
Mm, I see. Okay.
This
And
is
when it
this is
comes
just.
to, okay,
Hmm?
interesting to know. So basically, the 25, you mean that's the minimum loan for a limited company that they can ask for, right?
The other way around. If you're a sole trader or a partnership, then the
Okay.
25K is minimum. It's to avoid consumer lending regulation, because
Okay.
it's clearly business loans, and this is reflecting that. Yeah. For limited companies, there's no really lower ends. Usually we start at around 10K. Yeah.
Okay. Good. And now, when it comes to the type of products, this is also a very important question because I mean, in e-commerce, you can sell anything, right? So many categories out there. So, is there any type of maybe product that maybe has to do supplements or chemicals or specific type of equipment that maybe you guys don't support due to the risk and regulations, or this can be open to any kind of product in the commerce space?
So generally, we're pretty open to any kind of product categories, and don't differentiate too much. Of course, we're excluding everything that is like shady or illegal.
Yeah,
in
for sure.
in that's that's clear. And then, since we're taking these products as collateral, they should have a certain shelf life, and that's 12 months. So they shouldn't expire within 12 months after
Mm,
the. That's
very
important. So
important.
very very fast turning food, or pet foods or something like that. This we couldn't do because of the limited shelf life. But besides that, it works quite well. And where we are a bit careful in terms of product categories is products with a very short life cycle, like fast fashion, for instance, where okay, this is fashion now only for this season, and if I don't sell this within the next 6 months,
That's
then
it.
it's out of fashion, and then
Yeah.
there's not much value in that anymore. So we would be pretty careful about that. And similarly to very short life cycle electronics,
Okay.
but all the rest, like all the usual, e-commerce categories like sports and house goods and kitchen supplies, and also in the B2B space, we're quite agnostic.
Okay. Now, when it comes to marketplaces that you provide this support in terms of the funding, can this be
Mhm.
applied to any country right now? And basically, what I mean by this, can the business be located anywhere in the world, and you're able to provide this funding, or you are basically right now limited to certain regions worldwide?
Yeah, that's it would be a dream to offer it anywhere in the world,
Yeah,
like
for
just like a
sure.
software.
Yeah,
We're not quite there yet, due to regulations, unfortunately, because like
for
every
sure.
country has different regulations when it comes to lending, business lending. Yeah.
Mm-hmm.
And so we need to consider local regulations. Currently, we can support legal entities that are located in the UK, of course, in Germany, in Austria, and then a couple of adjacent markets that we can do on request. Yeah. So if you're
Okay.
anywhere in the EU and you just come to us, then the EU, you have the service provider freedom, so you can pick any service provider within the EU, and then we're also
Yeah.
able to finance you in general. But actively the markets I mentioned. Yeah, we're currently also
Yeah.
working on entering the US, because it's simply
Okay.
like second biggest e-commerce market, biggest Amazon market. And we'll probably be live in the next couple of months there. Yeah.
Okay. I mean, something interesting that you mentioned is that what matters is where the entity is located. I mean, there are businesses that they could have the entity in the UK, but they do operations in, I don't know, Latin America. So you could potentially
Yeah.
maybe do some of that, getting your lending in UK, but then use it for global expansion. Then you still pay everything with your UK entity and go from there, right?
Yeah,
That's a
that's a very
solution,
good
right?
point. We always in the business we always have two geographies: where's your legal entity and where are you selling, right? Like where's your
Yeah.
marketplace? And the marketplace geography is a bit easier. If you store the goods in that marketplace, of course we need to
Yeah.
potentially adjust the security contracts to local property law. But that's an easier part than really the regulatory finance part of
Mm.
where you legal.
Interesting. Interesting. Now, I also want to bring to the table the flexibility that you guys bring in terms of payments, because one of the burden of using in terms of solutions in terms of funding is that most of them they put you very harsh terms that you need to pay month after month, and if you don't pay, crazy fees and all of that. So I was saying that one of your main benefits that you keep pitching in terms of why you guys are different is that you're very flexible with that. So maybe you can give us a bit of insights on that as well. Yeah.
Yeah. Yeah, definitely. So let's talk first about the repayment and then about the pricing, because it's
Sure.
kind of two different things.
Mm-hmm.
The repayment, that was our first priority when we set up the model. We said it needs to be as flexible as possible. So we don't have monthly repayments, we don't have revenue-based repayments, because we said, again, coming back to this example in the beginning, where you're waiting for your goods for 3 months to arrive,
Yeah.
you don't want to make any repayment during that time. You want to
Doesn't make sense.
start
Yeah.
repaying, exactly. You want to start repaying when you make the first revenues with your investment. And that's why we said, okay, we set it up in a way that it's completely up to you when and how much you repay. But it needs to be in balance with the collateral. So you say, okay, I have now my 10,000 frying pans coming over, they're in the warehouse, and now I start selling them. And usually, like when you order 10,000, we would maybe take 8,000 as collateral, so that you have 2,000 that are free. You can sell them, you can make the first revenues, and then you can use these revenues to make a first repayment. And the repayment can be over 500 frying pans, can be over 2,000 frying pans, whatever makes sense for your logistics, for your fulfillment. And then you simply repay. and do that 3, 4, 5 times, sometimes more often. We
Yeah.
have customers who do it like 25 times in one loan, like
Wow.
25 small
Yeah.
also possible. And then you're done basically. Yeah, and this way you can really synchronize the repayment with your needs for working capital. Yeah.
Yeah.
Important to mention is we have one standard duration of usually 24 months. That's
Hmm.
like giving you
The window.
the basic time frame to repay the loan. Yeah.
Yeah. And
Um,
I think something just to add on this, which I like that you guys also mentioned your website, is that if you take the money and you don't realize after a couple of months you need it, I mean, you could take it back and basically there's no penalty on that, right? Based
yeah.
on which is good because some other solutions, if you take the money, that's it. Yeah, you're bonded for life. Good,
Yeah,
good. I
exactly.
wanted to mention that. Yeah.
That's that's a very good point, because that goes towards pricing as well.
Yeah.
Nowadays, when you take finance, the pricing is oftentimes a one-time fixed fee, and these
Mm-hmm.
players say, of course, super easy. You know what you're paying. It's one-time
Yeah.
fixed fee, but it has a big catch, and the catch is basically when you pay a one-time fixed fee, it's you're kind of like stuck with what you paid, and you cannot save. And sometimes you have the situation, you suddenly you hit a record month, you pay off everything within a month, and you want to repay,
Mm-hmm.
and then like you still then in this case
Yeah.
your effective annual interest skyrockets with a one-time fixed fee. And
Yeah. Yeah.
that's also, and it wouldn't really work in our case, because with our loan model, we don't know if you repay us in 2 months or in 6 months or in 24 months. Yeah. So
Mm-hmm.
a one-time fixed fee wouldn't work in that model. And that's why we said, okay, we structure it more like a software subscription essentially. So
Okay.
a you pay a monthly fee like you would for any software, but just instead of the user accounts or the amount of transactions or whatever you have in the software world, we take the outstanding credit as a basis for the monthly fee.
Mm,
So every
okay.
month at the turn of the month, we say, okay, over all your loans, you can have like 10 loans, you have 800K outstanding. And this means 800K times your price gives you the monthly fee. And that's the pricing model. As soon as you repay, you don't pay any monthly fee anymore.
Very straightforward. So that means realistically that even if you sign for the 24 months, you could eventually drop at 6 months because you use all the money, then you pay it, and then you exit it and no penalty there. Okay.
Yep,
Interesting.
exactly.
Awesome. Yeah, I think, I mean, we cover a lot of interesting things, to be honest. I'm very excited about what you guys are offering. And that's one of the reasons why I'm working with you guys. So before we conclude today's episode, for sure, I want to ask you if there is anything else you feel maybe we didn't cover around your solution, anything that you want to share in terms, maybe a case study before we conclude. Yeah.
Good question. Haven't thought of anything like that beforehand, but
Okay.
uh, yeah.
That's fine. That's fine. We can just remove it. That's totally fine. Awesome. So yeah, Nicholas. I mean, it's been a pleasure to have you here today. For sure, if somebody wants to reach out, maybe they want to ask you something specific around, questions specific to their business. Is there somewhere where they can reach out personally to you, and where actually they can, sign to the service? Yeah.
Yes, sure. For the application itself, it's quite simple. It's myos.com, myos.com, and there you can click any of the larger buttons on the page, and it should bring you to the loan applications.
Good. Good.
If you have any questions to me personally, I think LinkedIn is the best channel.
Yeah.
It's easy to find. I think my LinkedIn domain is NHILG. So
Yeah, I'm gonna make sure to put the link anyway and everything in the description so people can find. Yeah. So yeah,
yeah.
it's been a pleasure. For sure, I'm gonna have you on future episode as we start growing together. And in the meantime, I wanna thank you once more. Wish you an amazing rest of the week and take care. Yeah. It's been a pleasure.
Same to you, Vincenzo. Thanks a lot for having me. Take care.